Well, Ashburton Investments has seen an African consumer theme thread its way into their latest stock bets. Nkareng Mpobane, portfolio manager at Ashburton Investments, joins us now for more. Nkareng, thanks very much for your time. Let's look at the theme, and I like to go straight into the stocks when you give them to me, so we start chatting about them.
Okay.
A couple of your key exposures, MTN, Grindrod, Richemont and Illovo.
Yep.
You overweight those stocks. The commonality, some Africa exposure, emerging markets.
Yeah, that's right. So Africa is one of our bigger themes, and that's really, just to start on a macro view, it's really going to be demographically led. So a young population, a young workforce expected to come through rather in Africa. And obviously that's going to be driven by rising incomes, urbanization is expected to follow through, and obviously that's going to be dependent on education and how that rolls out in Africa and literacy levels. But we're quite bullish on the story, and as you say, through our stocks, MTN. So MTN having very great, a good footprint rather into Africa. So right now only 30% of its earnings South African based, but the rest of it into Africa and other Middle Eastern territories.
Lindsay, you want to come in here?
Yeah, Nkareng, I love the Grindrod story. I mean, it used to be a shipping company. I used to look at that index, that Baltic shipping index, and apply it to the share price of Grindrod. But today it's a genuine infrastructure play in not just South Africa, but the whole of Africa. This is, to me, is a long-term stock that we've got to buy and hold.
Absolutely, it's a definite buy and hold stock, and you're quite right. So before the crisis, say around 2007, you're quite right, it was primarily a shipping company, and since then it's managed to successfully diversify its earnings stream and revenue stream. So now it's more of an infrastructure play, it's a locomotive and railway play where you're seeing them starting to put up projects in the Mozambican area. And management has mentioned that they've identified a pipeline, quite a strong pipeline of around 10 billion rands worth of revenues, and we would expect that they would come back to the market, obviously to raise capital to fund these projects, to fund the pipeline that they've identified. And we're quite comfortable with that story. As you say, it is a long-term play, and it's quite a nice growth story, especially into Africa as it spreads its footprint across the continent.
On that point, Nkareng, I mean, I don't down Grindrod. I think, for the patient, you're going to be amply rewarded. But let's just get back to the Africa consumer theme, because some analysis that I've seen seems to suggest that Africa is going through its own forms of credit bubbles. Now, you can't generalize on that, and it's in certain pockets. But this is not a production-led situation. This is a consumer-led situation. At what point do we have an all fall down and your thesis is turned on its head?
So from a credit perspective, I think you could argue that it's really coming off a very low base. So certainly not to the extent where the South African, even if you can correlate it to the lower income segments, if you can liken the African consumer to that, certainly not to those levels. So there's still a way to go. So we're really not concerned on that aspect. As far as advances have grown in Africa, it really has been through a corporate play primarily, and this is again why we're still very comfortable with the consumer, the retail client extending themselves somewhat in Africa, and as I say, obviously incomes will be quite a major factor in that space.
Chatting about Aspen and Sasol, those are also two stocks that you are enthusiastic about.
So,
but let's start with Aspen, because it is the hero.
So absolutely, so quite overweight there, as you mentioned. So in the last 12 months or so, the share price has really been driven by their announcements of the various acquisitions that they've made. So they've made 5 acquisitions, and right now I think the market and the investor environment is looking at how these projects will be executed and how they'll be bedded down. And obviously management has quite a good track record in that aspect. Now, we think that Aspen still has some way to go. I mean, it is a 127 billion rand market cap, but translate that into dollars, it is an 11 billion rand market cap, $11 billion market cap rather. And so it's still quite small relative to its global peers, and we still think that they have quite a way to go, and they will be growing both operationally as well as acquisitively. So we do see that as they roll out certain projects. And then obviously I think their emerging market footprint, again, an aspect that we like about them. They've entrenched themselves quite well, and also earnings becoming much less in the South African space relative to their global footprint. So earnings at around 20% coming from South Africa. So we liked that aspect of them.
Nkareng, the second, something's flashing in my tiny brain here, because earlier on an earlier show, Fast Money, I had a woman called Jaliza Hatting in from Investment Managers. She said she likes Illovo and she likes Tonga, and you've got Illovo as one of your big overweight positions. The sugar story, is it simply because of consumption in Africa, consumption in the rest of the world, and people changing their taste? In other words, going for foods that are loaded with sugar?
So I would say you've hit it. You've hit the nail on the head when you say tastes, and how you see people as they move up the income segments and up the class segments. People seem to have a taste for sugar. So that's exactly why we're in Illovo, in that they're great African footprint as well. We would expect that as Africa urbanizes and as people start living the middle sort of income lifestyle, you would expect that consumption of sugar starts increasing in line with trends that we've seen with other global peers. So that's been one of the big drivers why we're invested in Illovo. Of course, on a company-specific level, they have spent the money they needed to spend, and we think that they've peaked in their capex cycle, and this should hit volumes. So volumes should increase quite nicely, and strong cash flows are expected out of it because they've spent the money already. And obviously, we will wait to see how that pans out. Dividend yields of around 4 to 4.5% on a 1 year forward. So that should provide an underpin to the share price.
Well, let's actually talk about sweet stuff with Illovo and Tonga, because they have one key variable, and that's Lome access. So their cash costs per pound have been accelerating over the last number of years.
Yeah.
And if they had to be in an open market, particularly in the dumped world sugar market, they wouldn't be half as profitable as they are. So in other words, you're very much dependent on EU access. And if your theme comes to pass, where everybody gets nice and rich in Africa, they'll lose Lome access. And in fact, Europe's already re-examining that. So how's that going to affect the intrinsic profitability of these companies?
So our view is that, so the agreements come to an end, or they mature or expire in 2017. So you've got a few years before that happens. And we do think that, we do definitely expect the nature of the agreements to change somewhat. But obviously I think the market is watching on how those terms change. We wouldn't really, our base case is not that these agreements will be scrapped completely. We do think, though, that they might come through in less beneficial terms to what Illovo is currently extracting out of those agreements. So where, for instance, the pricing is at around 22 cents or 23 cents currently, which is better than the current spot price in sugar, 18 cents, that agreement might come down somewhat. Maybe it might be just 1 cent above whatever spot might be, or whatever that agreement might be in place. But it may come through in pricing, it may come through in the tonnage that's allowed to be shipped to the EU, etc.
Biofuels and the opportunity there for Illovo, is it something that you're working into your models?
We would think over the medium term, certainly that's probably an area that they would be looking into, yeah. But nothing in the short term that we've priced in, no.
Nkareng, last question from me. I saw this morning on all the international television stations about some nutcase who's worth $900 million bought something called a chicken cup. And it was about 3.5 centimeters diameter. It was a Ming Dynasty chicken cup. It's very beautiful and everything. But this person paid $36 million in an auction in Hong Kong. Now, this brings me back now to Richemont, the luxury goods company. Does this mean that there's an insatiable appetite, not just for incredibly beautiful artifacts, but also for watches and jewellery and all that sort of thing? And is that why you love Richemont?
You could certainly say so. I mean, I guess people would have various and differing tastes, and that's certainly right up there with interesting. I think with Richemont, that the new legislation or government, they have decided to internally focus and sort of try to generate GDP from an internal aspect rather than what we saw in the 2004 to 2008 period, where it was really externally driven and exports were booming. So now it's really going to be a consumer-led story, and that's really why we like Richemont. So we know that Richemont has entrenched itself quite well into that Chinese market, and you've seen it coming through in the earnings over the last 3 or 4 years. And we definitely are driving the emergence. So where we like the consumer, one of the themes that we are pushing ahead is we don't like the South African consumer, but the emerging market consumer is definitely an area that we would play, hence the overweight within Richemont. And we still expect that growth to come through, as in your example earlier, that it is an aspirational brand, and we're still seeing quite a bit of money flowing towards that segment of the market.